Time now for business. We say hello to Kate Moody.
Hi, Francois.
You're watching The Spread.
I am.
With the spread being, of course, the cost of borrowing here in France vis-a-vis neighboring Germany. It's growing because the French opposition far-right leader Marine Le Pen is threatening to torpedo the budget by the minority government.
Yeah, this threat of another looming political crisis here in France, really affecting France's reputation, if you will, on the global markets. Marine Le Pen's far-right party is angry about proposed tax increases and spending cuts in the 2025 budget proposal. The French government is hoping to push those plans through by the end of this year, even if necessary, without a vote in Parliament. Now, all this has led to a spike in borrowing costs for the French state. This Wednesday, the yield or return that investors were demanding on a 10-year government bond jumped to over 3% for French debt, while Germany's was closer to 2%. That means the difference between these two, which is known as the spread in bond yields, hit its highest level in 12 years. Higher yields mean less investor confidence in the government's ability to make those repayments 10 years down the line. Now, all this could impact the credit ratings agency S&P's upcoming report on French public debt. It's set to be published this Friday. Moody's and Fitch already gave France a negative outlook last month. On Tuesday, French Prime Minister Michel Barnier spoke to broadcaster TF1, warning the far right and far left against voting to topple his government. Take a listen.
If
there is an alliance in the unlikely but possible votes between Mr. Mélenchon's voices from the far left and Mrs. Le Pen's voices from the National Rally, joined by the Socialist Party and the Communist Party and the Greens, the government will stop. What happens then? There will be no budget. There will be emergency measures. There will probably be quite a serious storm and a serious turbulence in the financial markets, where we are already borrowing at very high interest rates.
Well, let's check in on the rest of the day's trading action. Now, the CAC 40 here in Paris dropped about 1% earlier, settling about 0.75 of a percentage point in the red. The car industry in Europe still trending lower amid ongoing concern about fresh tariffs from Donald Trump. Wall Street's trending lower as well. The tech-heavy NASDAQ down about 1%. Shares of chipmaker Nvidia down 3%. Dell and HP down about 13% each on weak earnings guidance. Meanwhile, revised data show the U.S. economy expanded 2.8% in the third quarter. That's a healthy pace spurred by strong consumer spending. A key gauge of inflation, meanwhile, picked up a little bit. The personal consumption expenditures price index increased from 2.1 to 2.3% in October compared to a year earlier. That's a step away from the Federal Reserve's 2% target. Earlier this week, the central bank did indicate it could slow the pace of interest rate cuts if inflation remains a concern. The European Parliament has approved Ursula von der Leyen's new executive team. The EU Commission President officially begins her second mandate on December 1st. She said revamping the bloc's economic competitiveness would be a top priority, as would stepping up Europe's defense capabilities. That will mean a significant increase in defense spending, especially as Russia ramps up its own defense budget. Kemi Knight explains.
Congratulations. Minutes after getting approval from European lawmakers, the EU's Ursula von der Leyen made it clear there was no time to waste in boosting European defense.
War is raging at Europe's borders. Russia is spending up to 9% of its GDP for defense. Europe is spending on average 1.9%. There is something wrong in this equation.
That Russian figure is about to increase because while EU lawmakers were voting in Strasbourg, Russian legislators were giving their final backing to a 30% increase in defense spending for 2025. The budget, which now just needs Vladimir Putin's signature of approval, proposes spending the equivalent of 119 billion euros on national defence, a record amount that accounts for almost a third of federal spending. Von der Leyen has previously said the bloc would need to invest 526 billion euros on defence over the next decade if it wants to keep up with Russia and China. So far, spending is projected to hit 326 billion in 2024. While member states have increased their military spending in recent years, decades of underinvestment mean a number of them are still below the 2% of GDP required by NATO. In 2023, only 10 out of the 27 EU countries hit the 2% mark. Donald Trump's return to the White House has made defence readiness all the more urgent in Europe, amid fears he might reduce support for Ukraine. The European Defence Agency's latest report calls for greater cooperation between EU member states to reduce reliance on external suppliers and create a more integrated market for defence products.
That's all for now, Francois.
All right, many thanks. Kate Moody, who will be back with more business news later on.